we make of those numbers yesterday from Home Depot? Here's a stock that's been on a nice run, almost a tear, rallying more than 30% from its lows in late October. Most of those gains coming after the company delivered a merely okay quarter back in November. Since then, Home Depot's been gaining ground as Wall Street bets that interest rates will keep heading lower. Lower mortgage rates are good news for the home improvement space, although the yield on the 10-year Treasury has been rebounding over the past 6 weeks. But we had mortgage rates at 7% this morning. So did the Depot live up to the hype when it reported yesterday? Well, hard to say. Initially, the stock got hit for 4% in pre-market trading before opening down less than 2% when the regular trading started, and ultimately finishing up 22 cents. Crazy trading. All right, not great, but certainly not bad either, especially on a not-so-hot day for the averages. Even though the quarter wasn't decisive, there's always a lot to learn from Home Depot, which is why I want to walk you through the aisles to get it right. First, Home Depot delivered better than feared BTF headline numbers. Same-store sales were down 3.5%. Sounds bad, right? But slightly higher than the 3.6% decline the analysts were looking for. Net sales were down 2.9%. Again, not good, but Wall Street was looking for a larger decline. Home Depot also saw its earnings shrink by 15% year over year, even as the earnings per share number was 5 cents higher than expected. Get that? That's better than feared. BTF. It was altogether a meh quarter, capping off a meh year, or as CEO Ted Decker put it, 2023 was a year of moderation for Home Depot. Now that we've turned to the calendar of 2024, what really matters is the guidance. So how did that look? Again, it was just okay. Home Depot is talking about 1% revenue growth for the full year, slightly below what the analysts wanted to see. And they said to expect same-store sales to decline by 1%, also a little worse than expected. But on the other hand, they're forecasting a substantially higher gross margin, although not even to generate a better than expected full-year earnings outlook, which was disappointing to me. That's called a minor shortfall, though. Put it all together, and you can understand why Home Depot stock initially did sell off as the bots reacted to the earnings release. Once actual humans got involved, though, they saw the guidance for what it was, an appropriately conservative outlook from an appropriately conservative company which wants to be optimistic but doesn't want to call a turnaround and make a cold shot. That's too dangerous. It's not the way they do things at Home Depot. While the Despot didn't tell you the turn's right around the corner, it did do something I think it's more important than anything. It raised its dividend by 7.7%. That now translated into 2.5% yield, and that's the classic sign of confidence that we look for on Mad Money. Still, if you want to know what's really going on here, you needed to dig into Home Depot's all-important conference call. One of the first things that stood out to me was Decker's candid comments about the company's inventory position. Decker said that Home Depot, quote, entered 2023 with more inventory than it would have preferred, end quote, but then said they'd worked throughout the year to improve inventory productivity while delivering the highest in-stock and on-shelf availability rates since the pandemic. Yes. And now the company says, quote, feels very good about our inventory position heading into 2024, end quote. Okay, that is terrific. It's terrific because excess inventory is every retailer's nightmare. You need to heavily discount that stuff to get it off the shelves where you can bring in new product that might sell better, including, by the way, garden equipment. Now that Home Depot's got its inventory under control, it should have a much better time going forward. And that is why the stock is here and not here, okay? That's the difference. Decker also explained that the company invested $1 billion in improved wages for frontline employees last year with the goal of improving customer service. At the same time, the Despot's been looking to cut fixed costs out of the business. Previously, they talked about $500 million in annual fixed cost reductions, which the company thinks it can deliver this year. That's amazing. Management went into great detail about what they're doing to improve the chain's bread and butter pro business, where they supply contractors and other professional builders. That includes the acquisition of Construction Resources last December. Home Depot also said it will be rolling out new offerings for what they call the complex pro, meaning contractors with more specialized needs. While the company's sales were largely in line with expectations, keep in mind they took a hit from core commodity inflation, not to mention the harsh winter weather during parts of January. Interestingly, management said, and I quote, during the fourth quarter, pro and DIY do-it-yourself customers' performance was relatively in line with one another, end quote. Now, this is important. The big story on the do-it-yourself side right now is softness in certain big-ticket discretionary type purchases, with management noting, quote, customers continue to take on smaller projects while still deferring larger projects, end quote. I thought that was going to kill the stock, but it didn't. It didn't. That's a very positive sign. But it's about what you usually expect, given that we've got elevated interest rates, because larger projects often require a home equity loan. But there was some optimism this could change soon. And during the Q&A, an analyst asked if there were any signs of life Oh, man, Ted Decker hit that one out of the park. He said, quote, "There's loads of life in the sector," end quote, and added that the consumers are healthy and engaged, albeit in smaller projects. At the same time, Home Depot's still navigating a tricky inflationary environment. For example, deflation in lumber and copper wire negatively impacted their average ticket price by 35 basis points last quarter. That's a lot for a big chain. But management also said that framing and panel lumber, two important categories, quote, "experienced the most stable pricing level during the quarter in some time," end quote. I'm calling that positive. Now, overnight, most of the analysts published their reactions to the quarter, and, frankly, they were a mixed bag. HSBC actually downgraded Home Depot from hold to reduce, meaning sell, citing poor sales momentum and muted fundamentals for the home improvement market. That person better hope that this stock goes back here, or otherwise they're never going to be able to get on the bandwagon. But most reactions to the quarter were much more positive, analysts betting on a turn, especially as the year goes on. Maybe that's why the stock's only a couple of points from its high and 90 points from its low. So where do I come down? Look, there's been a lot of noise in the interest rate front lately, with Wall Street waking up to the fact that maybe we won't get many rate cuts this year, if we even get any at all, which seemed like a possibility that dawned on people when we got the January Fed minutes this afternoon. But after this adjustment period, I still think that rates will ultimately head lower, and that's a positive for anything housing related, including Home Depot. In the meantime, Home Depot's got a nice catalyst coming in the form of the spring planting season, which is like Christmas for any retailer with a gardening business. Besides, I'm betting that management deliberately gave a conservative forecast. They like to underpromise, overdeliver at Home Depot, which makes the stock's valuation feel more justifiable, just over 23 times this year's earnings estimates. Again, why it is so close to the high for the year. I wish it were a little cheaper, but I wish. What does that mean? Here's the bottom line. Sure, the quarter wasn't great, but the conference call commentary I found encouraging, which is why I am willing to be patient and hold on to Home Depot. Remember, you can't wait for the actual turn. You have to get in ahead of time or you'll miss the move. Management's commentary on their inventory position tells me that this is the right time to stick with the despot, and if it comes in, to do some quality buying. We're going to go to Matthew in Massachusetts. Matthew.
Hi, Jim. This is Kristen, Matthew's mother. Here's Matthew with his question.
Sure.
Hi. Thank you. Hi,
sure.
Jim. I was just wondering, how do you think BABA stock will react to the newfound hype around Temu, and really where you think that BABA will go in the future?
Well, Maddie's got horse sense. That's quite obvious. Okay, here's the deal with Alibaba. Right now, the Chinese government is cracking down on actual sellers. They're really putting a lot of heat. This weekend was cracking down on sellers at the opening and close. I mean, they're doing everything they can to make it so that the selling dries up. Unfortunately, the businesses really determine the stock price. But Alibaba's one of the few that I think is going to do well. So, young man, I think you're doing fine. And thank you for calling in on the show. Let's go to Trevor in Kentucky. Trevor.
Hey, Jim, quick shout out to the University of Kentucky Student Fund. My question is, with the upcoming healthcare spinoff, what are your thoughts on 3M?
All right, 3M stuck at 91. Yeah, and University of Kentucky, I've been there. It's absolutely fabulous. Lexington, fantastic place. Too many people go to Louisville. Not enough people go to Lexington. I think you're in good shape with that one after the spinoff, but we've got to see whether they've got all of the lawsuits behind them. I am not recommending stocks that have big lawsuits, and that includes 3M and includes Johnson & Johnson. Phil in Florida. Phil.
Hi, Jim. Thank you for taking my call and sharing your knowledge. I try to make the 1020 Investor Club call daily and appreciate your insight.
Thank you. There's been some ads about what we're doing lately.
There have been.
A little internal joke there. So what's going on?
I bought two food production stocks, something that you see in the grocery stores every day on a dip, and one seems to have risen slightly, but I was curious, about what you think. You recommend hold or sell Tyson and Hormel, TSN and
Okay,
HRS.
Tyson, I think, is bottomed, and I think one of the reasons is because you need protein. If you take these new drugs, the Wegovy and the Mounjaro, of course, also the Zepbound. But Hormel's harder. It's processed food and protein, and I got to do more digging because right now I don't think I've seen a bottom in that stock. But thank you for the call, and thank you for watching 1020, 1030 when Jeff Marks and I duke it out every day. Home Depot's management commentary tells me that this is the right time to stick with the despot, and if the stock comes down, buy. Remember, you can't wait for the actual turn. You got to do a little buying ahead of time. Much more made ahead, including my exclusive with Realty Income. What's the stock signaling about the health of the overall retail sector? Is that dividend going to grow? Let's get the latest with the CEO. And speaking of retail, I'll reveal the top takeaways from my huge conversation with Walmart CEO Doug McMillon. Plus, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.